The following is a technical analysis on the Nasdaq 100 based upon the CME exchange futures, as well as the US Tech 100 futures, US 500 S&P 500 futures, the US 2000 Russell futures, US 10-year Treasury note, and a detailed exploration deep diving into the 60-minute timeframes for both QQQ, the main component of the Nasdaq, and as well as additionally the 60-minute US Tech 100 futures. Starting off here off the daily interval, where we are now completely undercutting the 50-day moving average. I had a minimal reaction amongst that 15-130-26 price support. If anything, holding on to its last, holding on by the skin of its teeth there. Whereas you have the moving average convergence testing their zero line thresholds as of now, transpiring as a key inflection point for the technical momentum indicators, where you have the oscillator already down below its zero line threshold there as well, on a RSI trading around that 39 spot price. And I believe the 15-130-26 price support goes on a daily candle close below that key inflection point, and ultimately I would only reckon a re-challenging of the 14,871 48 price support there down below, and that'll be a pretty key inflection point where you have, again, just a multi-year price support level, significant price zone with an inflection point of reactionary highs and reactionary lows right across that spectrum. And I believe that to be a pretty reactionable, if not a tradable potential inflection point zone. Again, we put in a nice clean divergent high right into resistance off that 15,980.76 price resistance, offering an objective short trade entry, and we never went on to retest, came short to retesting that resistance level. We never came to fruition and re-challenged that there to the button, and then ultimately put in a nice daily candle close sell signal right amongst that key primary reactionary uptrend line here, right off the March 2023 lows there, and that has been nothing but a wave of selling since, and then ultimately breaking down below that trading bottom of that key trading range, back testing and rejecting it impulsively throughout that in key inflection point, where again you could have entered a nice clean short trade setup at the bottom of that 1546.30, call it the 786 fibs retracement, and that was rejected impulsively off that key inflection point, again ushering in a nice clean day trade right there for almost a 2% crash there, and then ultimately a 2-day inflection point right off that key inflection point, whereas the entire trade has been good for a 5.74% crash to the downside. I'll take you into the US Tech 100 futures here, and we had a significant reaction right amongst that key inflection point, right off the 14,974.60 price support there, and really to the button there, right off that correlating with the 618 fibs retracement. That entire trade for a day trade right there was good for a 0.4%, especially on a leverage trade. That is a great day scalp key inflection point, again with the same transpiring pattern as the CME exchange futures, where you again put in a divergent high, ended up breaking down, putting in that sell signal off that primary reactionary uptrend line off of the March 2023 lows there, and we are dancing right amongst the key 618 fibs retracement, call it 14,938 price support, and that is a pretty big key inflection point here off the daily interval, where again zero line thresholds are being tested as of now in the moving average convergence, slightly tipping below the zero line threshold on the oscillator as well, and again stochastics 1033 just crashing below that key inflection point, putting further damage into this inflection point. Whereas bull traders and or long traders need to hold this key inflection point really at all cost, in my opinion, to avert even further long-term damage with this within the technical momentum indicators of this dimension. And that is again just a key inflection point, just a psychological key inflection point, call it multi-year price support and resistance right off that reactionary high, reactionary lows really felt across the board there, and that is again that ends up being taken out. That could ensue further damage for the long term. This is why I will deep dive into the 60-minute charts to hone in on some clues where the next near-term underlying trend could ensue there. I'll take you on to the US 500 S&P 500 futures, and really to the button here, right off the 44.40.90 price support, especially if you're an active and or day trader. The entire trade right off that key inflection point was good for almost 0.6% and a single day move to the upside. And both traders and or long traders defended it pretty heavily right off that key inflection point, not going down without a fight. And I believe, again, could be a potential turning point where long traders need to defend this key inflection point really at all costs. Just a potential bigger move, a wave of selling if broken down below that key inflection point on a solid daily candle close on a retest of the 43.2990 price support, called the 618 fibs retracement. And that is a significant really biggest key inflection point of the year there, if and when we go on to retest it, call it multi-year support, just a ton, psychologically the biggest level in the near term on my in my opinion, and that is going to be a with the dominant focus of the week revolving around inflation in the producer price index, which seemed more persistent than anticipated by the optimistic soft landing scenario by the Fed, and which resulted led to an upward adjustment in the Fed funds rate projections. And really to the button right here, talk about a sell-off right off that key inflection point, off of the Treasury yields, bounced right off that key inflection point, off this primary reactionary high uptrend line, and really to the button there. That's where the sell-off started to occur there in bond land. And I've added this new 420.08 price resistance, call it minor price resistance, and I believe it has significant resistance, whereas an additional sell-off in the bond market on a solid daily candle close above that Treasury yield would usher in an additional extreme wave of selling in the Bondville land. And I only sense a fear permeating through the spectrum of all the AI bubbles. We're going through a soft landing. What could possibly crash the stock market? Well, bond markets will do that to you. They are the nucleus to the entire financial system, and these are just your key inflection points to watch if and when we get to these additional targets, and or potentially pull back in a safety trade there, where again bond bulls want to see a solid breakdown in this Treasury yield on a prolonged move down on a heavy bid for bonds. Whereas, again, that huge sell-off in bonds just it screams that there's going to be more inflation felt across, and a secondary wave of inflationary forces felt throughout the financial spectrum. Well, copy these charts, watch these key levels, and I will hone you in on the next targets if and when we come across them. Taking you out for any active and or day traders here, we have a QQQ here off the 60-minute interval. And I believe we've reached a critical juncture, whereas we have this primary reactionary high uptrend line off the March 2023 reactionary lows really across the board, and we bounced right amongst it right off that key inflection point, coinciding with the 364.64 price support. What is more bullish about this key inflection point is the divergent low that we've additionally put in now, with confirmed positive and bullish divergences really amongst all three technical momentum indicators there, and which makes for a complete minor reactionary downtrend line here, where it looks like we've broken above it and have this key inflection point heavily defended, re-challenging the 366.30 price resistance up above there. And that is just a key inflection point if there's any room for any long traders and or bull traders in the near term, active and or trades that they want to pursue a near-term rally to the upside with some key additional resistance zones and targets to watch if and when we go on to challenge some of these key inflection points. Bull traders, again, they need to step in right now, right here, really at all costs, where some short sellers could even begin their covering process for an additional nice counter trend, big rally to the upside, potentially even rechallenging this primary reactionary high downtrend line here off the July reactionary highs, and that would be a nice short op, an additional near-term short op for a bigger move to the downside, rechallenging this primary reactionary low uptrend line. Bull traders, long traders, bear traders, short sellers, if they see a solid hourly candle closes down, break down below this key inflection point, what's going to happen is you're going to burn off these divergences. You're going to burn off all these positive and or bullish divergences amongst all three technical momentum indicators, and I would only suspect a much larger wave of selling, stops to go off, margin calls, just a stronger wave of selling than we've even been accustomed to seeing, whereas you have these jagged, slow motion looking crashes with additional counter trend rallies, something like that, where you burn out those divergences, those positive and or bullish divergences would just be felt with a waterfall type of wave of selling if and when we take those additional key levels out, if and when we get there. So just key inflection points to watch, and I like some of these targets to hone in on and or actively trade within the intraday markets. Now taking you out to the US Tech 100 futures here off the 60-minute interval for any active and or day trading of futures traders. You have this primary reactionary high, low uptrend line here off the March reactionary lows. Again, just a multitude of reactionary lows right across the board, and we have put in a nice clean divergent low with, again, positive and bullish divergences constructed amongst all three key technical momentum indicators, honing in on a great risk reward ratio to the long side if and when we some of these key inflection points are panning out. We have this parabolic primary reactionary downtrend line, just a ton of reaction right across the board, and that's some of the key inflection points that bull traders and or long traders want to rechallenge on a complete rechallenge of this inflection point on a solid hourly candle close breakout above to rechallenge some of these key resistance levels, whereas you have the 15,257 price resistance, and I believe that is a pretty significant price resistance zone for any quick and or active day trading key inflection points to watch in for to sell into and or target, whereas the risk reward ratio again lies heavily to the long side in the near term, where short sellers, long traders, they want to see a complete breakdown. They want to see this this wedge completely break down, coinciding with the 14,973.80 price support there. And again, that is a pretty strong, very strong price support level that has an additional reaction right across that map. And a breakdown sell signal below that would not only potentially burn out these divergences, but again, I would only suspect a big waterfall, huge emergency rush for the exits, where bull traders, long traders, just stops go off, margin calls, just a ton bigger wave of selling than we've previously expected in this whole diagram of a downtrend. And I would only suspect a very painful move to the downside if and when that happens. But again, for now, bull traders, long traders, the risk reward arena and ratio lies heavily to the long side right now, with some some health being potentially speared back into these technical momentum indicators for potential prolonged move to the upside, with additional targets here at the 786 fibs retracement, call it 15,171.90 price support for T1, T2 15,257, the 618 fibs retracement at 15,310, and then the 50% fibs retracement, call it 15,415.80 price resistance up above, and then the 382 fibs retracement correlating with the 15,526 price support there up above. So see what happens. I'll keep you updated if we see any more significance here in the charts. Copy the charts, trade off these key inflection points, and we'll see what the next underlying trend comes to be.